Let's go ahead and start this off by saying that the Bulls are doing a great and excellent job at invalidating a bear play and moving a step forward into actually invalidating the primary signal that can lead to a downside. There's much to talk about here, so let's pop open the charts for a true edge over the coming sessions. Welcome back to the channel on this Hump Day Wednesday. This is ARCa, and let's dive into ticker symbol NVOS. Let's kill 'em, team. What is up, you guys, and welcome back to the channel. Let's go ahead and dive into ticker symbol NVOS, and what we're observing here is the bi-daily chart. And yesterday we actually noticed that we had a massive bear signal here that was it's actually called a bearish engulfing, right? So the forward candle red engulfing completely the prior candle in green, right? So this actually was a very interesting play since we actually started the downside here, coming down to around 111 and then completely recovering here, right? So I must say, and I must warn, that it's not over. We still have 15 hours and 54 minutes to invalidate this bear thesis here. So it's looking good thus far, but I will have to just, kind of put out that warning there just in case, but it's looking real good. Now, I want to go ahead and go over the shorter time frame in a 6-hour time frame, okay? Because there could be a signal here that would lead into the actual invalidation of this larger time frame signal. So let's go ahead and move on to the next chart. And this is what I'm talking about here, team. If we can just go ahead and zoom in ever so slightly here, right? Or actually, exponentially, whatever it takes in order for us to see what's happening, you're going to notice right over here that this is quite the opposite of what's happening in the bi-daily chart. This is a bullish engulfing, and this is a massive green candle completely engulfing the prior red one. And this is already a valid signal, and it's already playing that upside. Now, if you recall in yesterday's analysis, we were talking about the resistance level that we couldn't beat around the 116 to 118. We'll go ahead and feast your eyes that we closed at a massive 119 and looking still pretty good. And I will remind you that, yes, we were speaking of yesterday coming back down to the areas of around 104 to maybe $1 to see if we could actually get a massive double bottom, right? Or actually 104 would be that double bottom, right? So if that's not going to happen, it's okay. Why? Because remember that it was conditional. In order for us to move to that downside, a specific time frame needed to be closed, which is the bi-daily. We still don't know, but this recovery here is starting to make sense out of, remember what we said here, the double shoulder inverse head and shoulders, right? So you're looking at here the two right-hand shoulders here, the two left-hand shoulders, and the head. It doesn't give it any more validity. It doesn't give it any more potency. It's just to disclose here that there is a psychological formation within another formation that is bullish within another formation that is bullish, right? So you're talking about, or I'm talking about here, the descending broadening wedge into the descending channel into the inverse head and shoulders, right? So everything is looking pretty good here, and there appears to be an exit strategy at play within the 6-hour time frame. So the 6-hour time frame, I'm giving it some credibility here because it is not, it's not necessarily the hourly time frame or 30-minute or 15-minute where the formations tend to have a lesser strike rate, right? So I personally like formations at least in the 8-hour time frame and above. The 6-hour time frame is looking close enough. Let's see the 8-hour time frame if it has anything there. No, nothing there just yet, right? But yeah, the 6-hour time frame is close enough. Let's see if this has the potential here and the potency to push and cascade the bullish signals here into the following time frames. So we want this bullish signal to push in the 6-hour, and then when it gets to the 8-hour, hopefully it gets that push too, and then from the 8-hour to the 12-hour and to the daily and so on, right? So let's see if we can make those bullish time frames cascade into each other. Next chart. Let's go ahead and observe here, team, that this is the falling wedge that we've been observing here for the few days. Now, with today's data, I was able to identify a new floor, right? Being that 110, 111 bottom that we actually faced, depending on the broker that you're looking at here in specific, TradingView is showing and displaying a 110 bottom, right? So that was able to show us that it is respecting a regression, right? So that is all, yet again, giving us the validation of a potential falling wedge. It is a bullish formation. And from yesterday's analysis, we were able to extend the apex of the triangle based on this touch today. Right? So what does that do for us? Well, that gives us the benefit of time. And now why time? Well, if you recall yesterday, we were talking about the breakout period from this potential formation. They tend to break out, or anything in the triangle family tends to break out or break down anywhere within 65 to 75% to the apex of the triangle. And we pretty much have the apex here, right? So it's looking okay. This right now, we're literally at around that 65, 70% right now. We still have a few actually, 12-hour iterations that can still kind of linger around here in order for us to determine what side the trade is going to take, right? So it's looking pretty good. This is already at the point where it can face a breakout. So I'm just saying that. It does have space for more here, but it is within the realm of breakout already. Now remember that this formation does favor the bulls, but it also can be traded towards the downside, right? So now that we have more of an adjusted formation, let's go ahead and go over the targets. First of all, let's just go ahead and first go over the target from the center of the triangle to the very bottom side, right? So let's just make this line here a little bit more visible. Let's not make it dotted, right? So here we go. This is one of the targets psychologically that we can use, to take profit, right? So let's just say that we were to break out, let's just say here Thursday, let's just say Friday, right? So Friday it would be a breakout. Price action is leading to around $1.39. So let's just go ahead and start adjusting here our areas of take profit, right? So $1.39 looks like it can be taken to, right? So we do have an area of resistance right up here. I'm going to go ahead and remove this trend line here and adjust the range so that it reflects on that instead, right? So there we go. Now you're looking at a range that's 139 to 145 based on the breakout from the middle of the triangle, right? Now, next target to observe would be from the very back end of the triangle, right? So right about like this, take it from the top side to the very bottom side, and that will give you the second breakout target. So let's just go ahead and apply that now. Second breakout looks like it could be at the top side of about $1.62. It does have a range, right? I see it even still. So psychologically, compared to what we have historically in price action, looks like it could land. Let me take a look here. Which one is actually has? Yeah, I would say right about here, 159 to 162. All right, this is the second range here. And you know what? Let me just go ahead and also get this to be a similar color here as the one that we're kind of observing up there, right? And now the more immediate target would be, if we would break out from this point, then that would be your first target to look at, right? So from down here. So if we were to break out from that point, then we put it right there and move this slightly to the right, and that would disclose 131 top side. And you can see here that we definitely have resistance at 131, 130. Okay, so it's looking pretty good. Now that we know the targets to the upside here, please remember, okay, in case there is a rejection, this thing can drop to the downside too. Okay, so let's go over the conditions here for the next, this is actually the statistical back test, right, for the volatility versus momentum criteria that we actually took. And I actually made the NVOS expansion to contraction back test with the standard deviation calculation and the whole data set, right? The whole statistical data set. But before I do that, let me just go ahead and remind you, team, that I am officially at 16 seats left at the ARCa Masters course for my very last mentorship that I'm going to choose to teach, right? So this is a 16-week mentorship. There have been about 35 students per class. And the third class, track 3, started just about 4 weeks ago. So it's 16 weeks total. So January, at the beginning of January is where the track 4 students will begin. Okay, so I must remind you that the ARCa Masters course and its available seats are starting to get taken up. So I would, if I were you, I would go ahead and just send me an email, get the disclaimer, get the syllabus, get everything, and then make a conscious decision here. And let's get the year started right in 2024, right, team? So go ahead and send me that before the seats get all taken up, okay, team? I can only fit so many. I'm trying my best here, right? So anyway, let's go ahead and continue on the analysis. So based on volatility represented by BBWP here in a linear scale and versing this with stochastic momentum, I have taken a note of every single iteration where volatility has started to contract from critical expansion paired with an upside pivot of stochastic momentum throughout its entire trading history, right? So these are all the sample sets. Statistics are showing here 24 total iterations, of which 18 were guessed correctly to the upside. 75% upside accuracy is what we got. The upside accuracy, sorry. And the average upside thrust, or AKA your mean, is leading to 175.54% to the upside on average over the span of about 26.17 days. Okay, now what I did here is I definitely calculated the standard deviation, right? So from the mean, I calculated the standard deviation, and it's leading to 190.56%. Now, the standard deviation is the 68% of the results, right? So this is right where it lands. And I will say that if we can get a move that big, it's pretty insane, right? And the mean right in between, right? The mean is sitting at 175.54. Now, I did calculate the upper bound of the first standard deviation, second, and third. Upper bound and lower bound. Now, we're not going to be able to use any of the lower bounds because they're of negative value. So statistically speaking, they are unusable, right? So at this point, we definitely have some targets to the upside to observe here of massive proportions. So if we do have a catalyst here that is really that powerful, then yeah, price action, we can speculate here, right? But price action can lead to some really extreme targets, right? And let's just, this is 177, right? So let's just do, 175%. That would be the run to around $3.60. 191 being the standard deviation, being around 385. The 366% would be the upper bound of the first standard deviation, leading to 606. And the upper bound of the third standard deviation would lead to a target of about $10.69. Now, these targets are going to change depending on where the signal fires, right? So the reason I'm mentioning this is just to remind everybody. I know that you've already seen this video, but this is just to remind everyone over what's to come. 15 hours and 43 minutes to close this 3-day candle. That is going to be the make or break for the signal here. And what I mean by that it would be the official contraction phase starting of the volatility component and the official upside pivot of the 3-day stochastic momentum oscillator. So those are the conditions. We need the upside here, and we need the contraction coming down here. The next things that we're going to keep an eye on are of course things like the average directional index, right? So that would be the ADX, and we also, which is within the DMI indicator, right? The directional movement index. So this would actually give us that strength of value, right? So right now we're sitting just at about 20% trend, and it shows that the bears are leading the way, but very close to having the bulls maybe take over. Right, so DMI plus being the green and DMI minus being the red. So whenever the red is on top, that means bears are leading. Whenever the green's on top, it means that the bulls are leading. And the strength of the momentum or the trend would be displayed by the average directional index. 25% is usually the minimum requirement for it to be a strong trending market. But if you do reach a 30% ADX, that is absolutely strength, and there's definitely a continuation to the upside to be considered. Okay, so yeah, we have a couple things here, a few things that need to be met in order for us to really get that upside going. Immediate short-term time frame RSI looking like it has a pretty nice upside pivot here, and with this thrust, let's see the 15-minute. 15-minute looks like it's about to cross over the SMA 14 represented by the pink line. Same situation with the 10-minute. And it looks like the 5-minute is going to lead that way. So 5-minute is going to cascade into the 10-minute combating that SMA 14, which will then cascade into the 15-minute combating that. This RSI signal would reach the gravitational pull here and pull the price action to the upside, thus pushing the 30-minute into its gravitational zone here for a continuation to the upside too. Upon doing that on the 30-minute time frame, your shorter time frames like the bi-hourly time frame would then actually continue on to the upside, and we're already getting the hint that that is the case. We are in the gravitational zone here and getting ready for a continuation to the upside. Now, the RSI does have several areas of gravitation, right? So any junction here, 2% up or 2% down is gravitation, right? So right here, We are within the 52, we are within the 48% from the 50%, right? 50% mean we count down 48% gravitation, 52% opposing gravitation for downside, right? So this case, we're using the SMA 14 with a bounce into that gravitational zone, highly likely for us to get pushed to the upside. Now, depending on the strength here from the immediate short term, that's going to eventually tell us if we do have the thrust to actually combat this opposing side's gravitation here. We are right at gravitation for a resistance, right? So we're at resistance from the SMA 14 and resistance from the gravitation, likely to get pulled down. But what will have this succeed the upside of the SMA 14 will be the shorter time frames, and we need to see how those behave. Okay, but something is telling me that it's pretty good. 12-hour time frame facing some support at the SMA 14 here. There could be a little short-term downside before a continuation to the upside. And I imagine that can be upon facing some short-term resistance, right? So if we do have a short-term resistance, it's actually looking like it could be around the area of about 123, and it is a range too. So let's just go ahead and kind of draw it in here before we get some type of pullback, right? So 123, and then your top side resistance, let me see if it rhymes with other targets, right? And we shall see. Let's see. Hold on just a moment. I want to make sure that we can do this correctly, right? So, yeah, it is kind of a large range. I would say 123 to 127, which is very much the resistance of the channel, right? So that could be a possibility here. And the bullish engulfing is actually giving us that continuation potential. Right, so yeah, I think everything is looking good. Now I'll feel more comfortable talking about the upper time frames, like the bi-daily and the bi-weekly and all that, as soon as we can get the shorter time frames to really cascade into the larger ones, and then we shall see. Right, but everything is looking good in the shorter time frames. Please remember to reserve your seat now before it's too late in the ARC Masters trading course. Okay, team. So I think this is a pretty good place to kind of leave off. Right, so. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 and never forever. I need you to do your own due diligence and everything will be absolutely cool. But with that said, team, I wish you well, a very good night, and I will catch you at the Bell Mañana. Adios.